Yeah, I saw your recording, sir.
Yeah. Yeah, good. Even though if you miss few classes, just you can listen to that. So
Yeah,
FIMM
yeah, you're helping.
integration, yeah, FIMM integration is a bit typical and a bit difficult to understand. In spite of that, let us go through it, and I have forwarded the document. All of you, please go through the document, and we are looking at the integration that has already been done for a company called 1000, that is 1000 company code, and chart of accounts is INT chart of accounts. See, our company code is Dr. Reddy Lab DRL, DRLB is our company code, and DRCA is our chart of accounts. Similarly, in SAP, the standard company codes are there. The standard company codes are uh, see 1000 company code, and INT is the chart of accounts.
We can't see your screen.
Right. See, if you see the company code OBY6. What is OBY6? Anybody by chance? OBYC is nothing but
I think
huh?
we can see whatever the chart of course defined for and whatever the fields are
Yeah, global parameters.
for that company. Yeah.
Yeah, global parameters we can see. Right. So here, see, we can see our company code, DRLB, chart of accounts, what is the group company, what is fiscal year, what is the field status variant, posting variant, all these things we can see. So like this, when we buy SAP, this SAP IDS version, here we have standard company code. Standard company code like 1000. 1000 the standard company code, and all these things are already defined for this. The FIMM integration, SD integration, everything has been defined. So for this company code, 1000 is the right company code, and so DE, that is nothing but Germany, country key, chart of accounts INT, right, company, right, the group company also 1000, and country chart fiscal year variant K4, like this, all the parameters you can see here. So we are going to watch how this fellow has done integration, right, in OBYC. OBYC is the T code, and the path etc, everything is given in the document. Just give me a minute. Right, so in OBYC, we are going to see the standard settings, what integration settings has been done by this company, right? So I told you already, we have gone through some of these things already. What is meant by valuation class? What is meant by movement type? Right. So here we have gone through. So this is the material type, ROH, FET, HALB, HAVA. So raw material is ROH, finished goods, FET, and HALB means semi-finished goods, like this. And for each type of material, system identifies the valuation class. This valuation class will be defined in the material master record, and the same thing we are going to see here in the OBYC configuration settings. So first is BSX, inventory posting, and also I told you what are the accounting entries we require when goods are received. Right, inventory of raw material account debtor to GRIR clearing account. Right. See, when inventory of raw material is received, inventory of raw material account debtor to GRIR clearing account. And so here the receipt of material is done in two phases. One is when raw material is received, another one is when invoice is verified. So invoice is verified means one person is going to receive the goods and another person is going to verify the invoice with reference to the purchase order. So purchase order is an order, is a document which is given to the vendor, in which all the supplying conditions, pricing, all other conditions will be given. So with reference to that purchase order, how much material has been received and how much is still pending, all those details will be there. So when material is received in the plant, inventory is recorded and taken into the books of accounts, and material is physically taken and stored in the warehouse. Then subsequently, so the T code what they use is MyGo, and in that MyGo transaction code, the receipt of material will be executed. At the time, inventory of raw material account debtor to GRIR clearing account is the accounting entry. Subsequently, when invoice is verified, this GRIR clearing account will get nullified and ultimately vendor account will get credit. So when commercial invoice is received by the finance department, then this entry will be passed. Right. So for that purpose, for getting that entry, we need to configure, like say here in OBYC, for inventory posting, the accounting entries are BSX. Double click on this. INT is the chart of accounts. Right. Here for 0001 is nothing but a plant that is referred as valuation modifier, and 3000 is valuation class. 7920 is finished goods. 7900 is semi-finished goods. Right. So in case raw material is received, this is the account to which it has to be posted. All these things we have seen. And the offsetting entry, see, this is when inventory is received. When inventory is issued to the production, right, this BSX, these things we have seen. When raw material is issued to the production order, right, the accounting entry is going to be raw material consumption account is debited and inventory of raw material is credit. Right, this is the accounting entry. But I told you there are several types of material issues. It may be raw material issued to the production, raw material issued to the sample quality report, and raw materials may be issued for scrapping, etc. So how system should identify? For that purpose, general modification has been given. General modification key has been given. So here, in order to post this accounting entry, whenever raw material is issued, raw material consumption account is debited, inventory of raw material is account created. So in order to get this accounting entry, what we need to do is, so here OBYC, BSX is for receipt of raw material, then GBB is the transaction key, right, wherein, see, this is the GBB. Offsetting entry for the inventory posting. Right, GBB, double click on this. Then here, these are the configuration settings. See, let us see here. See, as an FICO consultant, our job is to just to give the GL accounts. But before we give the GL accounts, we need to understand what is meant by valuation class, what is meant by general modification key, etc. We should know. So the general modification key is nothing but, see here in the notes which I have sent to you, raw material consumption account is debit, inventory of raw material is credit. So inventory of raw material, we need not do any configuration further. The reason, we have already, BSX has been given. BSX wherein 3000. BSX in combination with 3000 valuation key will be posted to this account. So that will be created. So that's why there we have given credit as well as debit both. See, everywhere credit and debit is given. When inventory is received, it is debited. When inventory issued, that is credited. So that's why for second line item, we need not do any further configuration, but for the first line item, I need to give. So raw material consumption account is debit. In order to give the debit means here raw material is consumed. For that, GBB is the account key, right? See, GBB is the account key, but a raw material is issued out here. Raw material issue may be for different purposes. Raw material issue for sample, raw material is issued for consumption, raw material is issued for scrapping. So like that, the issue of raw material may have different purposes. So for that purpose, we need to inform to the system, because depending upon the purpose, we need to give the GL account. So for that purpose, what we need to do is this GBB should be associated with a general modification key. Instead of writing here consumption, here BSA, something like that is given. See here, the transaction key GBB needs to be updated. GBB key is used for various offsetting posting entries. For various offsetting posting entries means consumption, for sample, for scrapping, like that. For any purpose, raw material can be issued, right? So within GBB transaction, there are various account grouping, that is general modification, right? In this case, you need to update general modification VBR with raw material consumption account. What is VBR? VBR indicates consumption of material. Just to simply imagine that VBR is nothing but consumption of material. See here, for 1000 company code and in the international chart of accounts, say VBR. See here VBR. VBR means nothing but consumption. 3000 indicates raw material and 4000 here indicates the GL account, right? So GBB is nothing but offsetting entry, that is issue of raw material. VBR indicates for production, that is raw material consumption for production, and 3000 indicates raw material. If raw material is going to be used for the production purpose, against VBR I have to give GL account 4 lakhs. Let us see what is 4 lakhs. Go to FS00. What happened? Yeah. See what is the GL account? Goods received, invoice received. This is no, not this one. 4 lakhs. Consumption of raw material, right? So consumption of raw material means here, see 3 lakhs against VBR, against VBR, 3000 valuation class indicates raw material and 4 lakhs indicates consumption of raw material. So as an FICO consultant, see our MM friends will say that, boss, I have already configured these things, you give the GL accounts. So what we do, we give them the GL accounts. During the blueprint stage itself, we'll finalize all the GL accounts. What is the GL account to be given for raw material consumption? What is the GL account to be given if raw material is issued for scrapping? What is the GL account if raw material is issued for sample quality reporting? So for all those purposes, for each purpose, there is a GL account, because if the raw material consumption means consumption account, scrapping means loss account, sample means sample testing account, something like that you have to give. So VBR always indicates issue for consumption of raw material. So that's why here it says that in this case you need to update general modification VBR with raw material consumption account, right? So 0001 is the plant, VBR is the general modification key, 3000 valuation class indicates raw material valuation class, and 4 lakhs is nothing but consumption account. Similarly, when initial stock is uploaded for raw material, initial stock uploaded means what? Taking up the opening balances. Right, taking up or uploading the opening balances. Because when you are uploading opening balance, what is going to happen? Raw material account is debited, right? So one stock data takeover account is going to be created. See, one debit, one credit, there should be double entry bookkeeping. So that's why when raw material is taken, inventory of raw material is debited and stock data takeover is created. So inventory of raw material, for that already we have given that settings. That is BSX is the transaction key, and against that valuation class 3000, and then we give the jail account. So for raw material account we need not give any setting again. But second one is stock data takeover is credit, right? This is the opening balances we are taking up. So for this purpose, the transaction key GBB needs to be updated. General modification key BSA needs to be updated with the stock data takeover account. Let us see this against GBB BSA. See, this is GBB and BSA, right? BSA raw material, right? 3,99,99. So this is opening balances upload account, stock data takeover, that's called. See, inventory taking, right? Stock take results, clearing account, right? Inventory taking, this is nothing but inventory opening balances we are going to upload. So if we are going to do these settings here, the standard settings, INT chart of accounts, GBB. So for each thing, whether BSA or VBR or all these things, again for each and everything. So this is raw material. 3,100 is nothing but I think something like packing material or something. Trading goods, right? 7,900 semi-finished goods, that also will be consumed, right? So the transaction key GBB needs to be updated. Similarly, when goods are received, goods receipt is made for finished goods against production order, right? Whenever we receive the goods from the production, then the accounting entry is finished goods is debited and change in finished goods is created. And here the transaction key BSX for the valuation class so and so. For the change in the finished goods, we need to create, right, GBB against AUF. See here, right, GBB AUF 7,920, nothing but finished goods. 7,920. Say finished good products, right? AUF 7,920. See this account. Factory output for production means whenever finished goods are going to be generated from the production, so we post to this account. So like this, you just go through the notes, everywhere entry is given and what is the configuration that we have to do it, right? So so like this, for every accounting entry it has been given. Try to understand, okay, what we do after some time, once we go to certain stage, if possible I'll tell you how to create MM records, because when we go to the controlling I'll tell you how to do the configuration for the materials management, and certain settings we'll do, and certain integration settings also will do it, so that you'll understand how integration actually works. But here, let us stop here to this extent. How integration works, that's what we have seen. We heard about the new terminology like validation class, movement type, right? All those things we have seen. So let us close this and see the MIS. Then we'll start asset accounting. So asset accounting is bit again a little more complicated topic when compared to the GL, ER, AP. GL, ER, AP are seems to be a bit simple, and asset accounting requires, okay, we need GL accounts, we need AR, we need AP. All these three are required, right? The configuration settings will be a bit more, and then execution of the business process. So let us see the MIS report, then we'll go ahead with the asset accounting. In case of MIS also, see, whatever we have posted, now just we need to execute the reports and we have to take it out. Right here, there is no further configuration. What you do, go to the information system, reports for accounts receivable, accounts payable, vendor balances, vendor items, master data, payment transactions. Right. So vendor items, drill down all these things, all four you drill it down. Say list of vendor line items. If you post more and more entries, you can see the big reports. Here, just give only company code, nothing more than that. You can see here the total vendor accounts and what are the transactions that we have posted to the vendor. ABC raw material suppliers, Delhi. So whatever the total transactions that we have posted, KR indicates invoice, KZ indicate the payment, and KG indicates credit note, like that. And 3000 is there, means there's a discount. So this is the second party. What we can do, we can instead of spreadsheet, take it to local file and HTML format. Just take it into onto the desktop. Vendor report, HTML file, save, generate. See here in the Internet Explorer or whatever, Google, right? So here you can see, you can post, copy. So as it is, that will be copied. So Dr. Dilab, and this is the name of the vendors. There is a PQR. So Ms. Mehta, legal advisor. Like that, whatever the entry that we have posted, everything can be seen as if as a GL account. So then coming to list of open items for printing. So each and every report, just drill down and see the report. Here it indicates the master data, and here vendor balances. Always first one will just give you the overview, that's all. It will not have any report. I'll show you here. See here, it will only show you the tree, what reports are available, all those things will be seen here. So that's why for the time being it is not useful for you. And vendor balances in local currency. Only the total outstanding balance will be shown, that's all, nothing more than that here. And any report you want to generate other than this, right, it has to be get developed with the help of a ABAP consultant. A total purchase are around 14 lakhs 17,000. So vendor business. So like this, each and every report, drill down and see. Master list, this is address list, etc. And payment transactions, payment list, check register. So paying company code. See what are the checks that we have issued. Check numbers up to 6 checks, payment date, the currency, the amount released, the total checks will be received. And here it says that it has wasted 2 checks when you execute automatic payment program. First check and last checks it has wasted, and the blame is thrown on me, stating that voided by Anand and a test printout. Right, so it has been designed like this in SAP IDES version because people should not use this version for real purpose. So that's the reason they don't allow certain facilities. So like this, you drill down each and every report, just you can look into that. So we have seen this, what you call accounts receivable, accounts payable. Now we are going to see the asset accounting. Asset accounting indicates, 1 minute, let me. So asset accounting topics, again basic configuration settings in IMG. Here the basic configuration setting itself, it will have around more than 15 to 16 steps are there. So that is which is very much crucial. Then creation of asset master records, then business process, acquisition of assets, how to acquire an asset, and every month how do we provide depreciation. Generally we have seen depreciation provided once in 3 months whenever we make any finalization of quarterly accounts, or once upon a time we used to see once in a year or once in half a year. But in SAP we provide depreciation every month, because when SAP is there, management will ask for definitely the reports on monthly basis. All monthly maybe P&L account and balance sheet and asset reports and accounts receivable reports, accounts payable reports. So monthly we generate it. So that's why depreciation here we execute monthly. And asset retirement. What is meant by asset retirement? Retirement with customer, without customer. Scrapping of an asset, because when the asset is outdated and its useful life is over, we can scrap it. And transferring the asset, transferring from existing asset, transfer to an existing asset, transfer to a new asset. And mass creation of assets, assets under construction, because for certain assets like buildings, a factory building is there, you cannot acquire the building, factory building. You can acquire an administrative building, but factory building, okay, if you are acquiring a completely new factory, you can take it as acquisition of factory building. Otherwise, if you are going to construct the factory building, right, how to do that? Because stage by stage, maybe 1 year, 2 years or 3 years, right, years together, the construction activity will take place in case of a big companies. So as long as we are incurring the expenses, all those expenses are debited to an account like asset under construction. Then that will be capitalized subsequently. That we'll see in case of asset under construction. But asset under construction to configure, we need even controlling. That is cost accounting also should be done. So though this topic belongs to asset accounting, this topic we cannot see unless we have controlling configuration in place. Then coming to the management information system. So these are the 10 topics we'll see in asset accounting. See, if you take a company, typically you'll find certain assets like, say, land, buildings, plant and machinery, furniture and fixtures, vehicles, low value assets, assets under construction. So like that, different assets will be there. Right? This in SAP we call it as account determination. Right? Account determination is nothing but, say, this table also given to you. Here it is given. So assets may be the main assets. See, if you observe, these are the main assets which you can find out even in the balance sheet of a company. Right? Assets, land, buildings, plant and machinery, furniture and fixtures, vehicles, low value assets, whatever it may be. Right? All these assets are going to be, the main headings are going to appear in the balance sheet. Asset class. Now depending upon the asset, what we do, we classify the assets. Say for example, land is there. Land can be divided into lease, that is leasehold and freehold. Nothing but the land which is taken on lease and land on which there is no lease, freehold. So we can hold certain lands. Maybe if in future we want to construct some factory or maybe buildings. So for that purpose, you may acquire certain lands and keep it. Right, that is called freehold land. If you have acquired an asset, right, say for example, during a prime locality, you have a big site wherein you want to construct a building on that. So building owner says that, sorry, I'm not going to sell that property, but you want it. So you can ask for a lease. So generally land can be taken lease for 49 assets, for 49 years or 99 years, like that. For example, here we have in Hyderabad, we have our old airport. Now we call it as a Begumpet airport. in the Begumpet airport. In front of the Begumpet airport, there was a huge land was there, and that has been taken by one of the five-star hotels from Airport Authorities of India, and they have taken for 99 years lease. And since for 99 years that land belongs to that five-star hotel people, they have constructed a very big hotel. So they will have terms and conditions. After completion of the lease period, the building it can be can be given lease can be revised, or the building along with the land, right? So it will be handed over to the party. For that building cost, whatever the book value, maybe that landowner may have to pay. So those terms and conditions will be written in the lease agreement. So we can classify the land into freehold and leasehold. Buildings. We have buildings like administrative building, factory building, guest house, any type of building. So we are going to classify the asset into this type. Plant and machinery. Again, we have heavy plant and machinery and non-heavy plant and machinery. Furniture and fixtures. Maybe factory furniture, office furniture. Vehicles. Factory vehicles, office vehicles. So factory vehicles means the vehicles which are used in factory, like even the buses which will carry the plant employees, etc. Apart from that, say tippers, bulldozers, proclaimers. So what are the heavy assets that are being used in the plant? So that can be divided into factory vehicles or office vehicles. Office vehicles are cars and jeeps, any other assets which are used for the office. Even the buses also will come under that. Low value assets. Low value assets are an asset, say for example calculators and certain other small or cash machines, right? Cash registers we call it, right? All those things are the value of the asset may be less. So as per the policy of the company, any asset which is less than 5,000, I can write it off as an expenditure, right? So initially they'll be shown as low value asset. At the end of the year, everything will be written off with 100% depreciation. So that's we call it as low value asset. Next is AUC, asset which is under construction. So asset under construction can be classified again, say maybe factory buildings under construction or any other administrative building under construction. So like that we can classify even that. So that is called asset class. First one is account determination. This is called asset class. Asset classification we can do depending upon the client requirement. So before we classify it, we need to study and understand the client requirement, and even the finance department, the finance people will help us what is their requirement in future, how they want something like that. Then coming to asset master record. For each and every asset we need to create a master record. Say for example, here administrative buildings are there. If you have administrative building 3 or 4, then administrative building 1, 2, 3, like that we give numbers. For each asset we are going to create a master record. Again, master record is a permanent nature, right? Permanent nature means say GL account is a master record, customer master is a master record, vendor master record. So like that everywhere we'll find a master record, the main record. So we have to create asset master card for each and every asset. If I have 10 buildings, I have to create 10 master records, and each master card will contain lot of information. The name of the asset, when this asset has been acquired, when this has been capitalized, what is the rate of depreciation applicable, and what is the location of this asset, and from whom we have purchased it, any insurance is there, if so what is that, right? How many years this asset is going to stay long, and after completion of the useful number of years, what would be the approximate value of this asset? Oh, not 1 or 2. So much of information is available in the asset master record. Each and every asset, including a chair, we have to maintain separate master card, right? Say even if you buy 100 chairs at a time, So better to have 100 MasterCards so that you can identify each and every asset. Or otherwise I can take like say all 100 chairs. I have purchased it, and 100 chairs maybe for 1 lakh we have purchased it. And you can take all 100 chairs as one asset, but you cannot identify where each and every asset has been deployed or given. Say for example, few of the chairs may be kept in corporate office, few may be in the plant, few may be in the branch office. So to identify the location of the asset, etc., better to maintain master record for each and every asset, right, including maybe a chair, maybe a table, or whatever it may be. So that's why here we are going to create asset master record. So admin building 1, 2, 3, factory buildings, factory building 1, 2, 3. For each and every factory building, I need to have a master card. So heavy plant and machinery, non-heavy. So heavy plant and machinery 1, 2, 3, 4. Right, non-heavy plant and machinery 1, 2, 3, 4, like that we have to have. So furnitures, vehicles, for each and every vehicle you need to have a master card. Now subasset master. So account determination, asset class, asset master, and sub asset master record. What is subasset master? Say for example, you have heavy plant and machinery. Like I think you might have heard about lathe machine. Lathe machine is a machine which cuts, used in the heavy engineering industry. Even it cuts pipes and other things, shapes it. And one lathe machine will have a sub motor. Say for example, one motor associated with that main machine. And the presence of sub motor, that small motor, is necessary in order to run the main asset also that is associated with. So in such case we can call it as a sub asset. Say for example, one jeep is there and a trolley is there. Always this trolley is associated with jeep. So jeep is main asset, trolley is a sub asset. Main machine, say you take offset printing machine. Offset printing machines are huge machines, and there will be some small okay, maybe UPS or stabilizer associated with it. So you can take stabilizer as a subasset. Say similarly, one fridge is there, a stabilizer is there. So fridge is, that stabilizer is used for the purpose of fridge. So subasset is stabilizer, main asset is fridge. And generally what we do, even the rate of depreciation applicable is on main asset, subasset, both will be same. Then coming to, right, so account determination, asset class, asset master, subasset master. You have to have clear understanding of this classification before we go ahead with the asset configuration. So that's why notes has been, in the notes it is given, and I'll say once the class is over I'll forward this document to all of you. So before we have the next class, right, all of you go through this. Then coming to, and here depreciation. Say for example, on the land we have 0 depreciation. Admin building maybe 5%, factory building maybe 10%, and plant and machinery 15%, 12%, like this. So we have to identify what is the rate of depreciation. Again, rate of depreciation as per the Companies Act, as per the Income Tax Act. In India, the rates of depreciation are different for as per the Income Tax Act and as per the Companies Act. Why there is a difference? Because the rate of depreciation is very high in case of Income Tax Act, and one more thing is the method of depreciation also depends. Again, we have different methods like WDV method, that is nothing but written down value method, straight line method. So depending upon the nature of depreciation, your percentage changes. That anyhow we'll see when we go to the depreciation, the chapter depreciation. Then Asset accounting organization structure. Whenever you are going to create asset accounting, the first and foremost step what we have to create is the chart of depreciation. You know, chart of accounts. Chart of accounts is client level. Right, at high level this is. Client level means any number of company codes can use same chart of accounts. Right, we have the fundamental what you call fundamental principles. For this you need to read the documentation there in the IMG, right, against each and every configuration step I told you to go through this configuration, sorry, that documentation. Apart from that, you can read even SAP library. In SAP library also you have all this information. So this is the group company, these are the company codes, and I have this chart of accounts. Chart of accounts is higher than the company code, nothing but client level. And similarly, I'm going to create one chart of depreciation, that is DRCD, chart of depreciation, just like chart of accounts, chart of depreciation. Now what we have done here, each and every company code is linked to chart of accounts. Whenever chart of accounts, any GL account is there, these GL accounts can be used by any number of company codes, right? But there is a condition I told you. If you want to assign same chart of accounts, right, the companies should have one more thing, better to have same fiscal year breakdown. Similarly, here chart of depreciation, fiscal year breakdown means each and every company better to use the same financial year for the company. So generally, even under the group, what are the companies that you are going to link up? I told you in the beginning itself, better to have same fiscal year. Of course, it doesn't mean that we should not link up a company which is having another fiscal year variant. We can do it, but the thing is we cannot consolidate it because the periods will different. Periods may differ because here we are using April to March, and if the other company is using January to December, then that is different. You cannot club both. Similarly, in case a company is having fiscal year like July to June, generally UK companies do that. So whatever it may be, but there are certain fundamental rules are there. We need to define chart of depreciation. That chart of depreciation has to be linked to the company codes. First of all, what is a chart of depreciation? We know chart of accounts. Chart of accounts is a chart wherein you'll have all the GL accounts defined, right, which are required for the company codes. Any number of company codes can be linked to one chart of account. Right, so like that we have the chart of accounts. Now chart of depreciation is nothing but, chart of depreciation is a chart wherein it holds different types of depreciation. Maybe depreciation as per Companies Act, depreciation as per Income Tax Act, depreciation as per the consolidation requirements, depreciation as per the group requirement, something like that. I'll show you once we go to the chart of depreciation. I'll show you different options will be available to you, but mainly we use even depreciation for controlling area also, because I cannot use the same rate of depreciation which I am using for financial accounting. So that's why for as per my controlling requirement, I can have different depreciation method. So like this chart shows you this is the group company and company codes are here, and here chart of accounts, and chart of depreciation is also client level. Any number of company codes can be linked to one chart of depreciation, right? But provided the same chart of account should have been linked here earlier. And here I told you account determination, asset class, asset master, sub-asset master, right? See all those things. Here there are certain notes. Even these notes are given here, right? These notes are nothing but sub-asset master is created with reference to the asset master card. 1 minute. accounts. Yeah, I think we'll copy here. See here, subasset master is created with reference to the asset master card. So whenever you are going to create subasset, it has to be created with reference to the main asset master card. Asset master is created with reference to the asset class. So whenever I'm going to create asset master, it has to be created with reference to the asset class. Right. The exact meaning when we do the configuration, you will understand. But these are the things you need to understand here. And asset class is defined with reference to the account determination. So depending upon the account determination, I'll be defining the asset class. And account determination has to be identified as per the requirement of the client. So whatever the main account determination, right, it will be defined with reference to the client requirement. GL accounts have to be created and linked at the chart of at the account determination level. So here we are going to create GL accounts with at this level. At account determination level, we create the GL accounts, and subsequently what we need to do is we need to integrate those GL accounts with asset accounting. These things we'll see in the next class. So let us stop here with this introduction. So tomorrow we'll start the configuration of asset accounting.